All right. Welcome back. I am hopping on again today, trying to get more consistent with my streams or videos or vlogs, however you want to call it, and just try to add value where I can in this space. And that is the investing, the trading, the cryptocurrency space. I really want to try to be that person that I didn't have on my journey. So that's what I want to do. So I'm going to be hopping on as much as I can and just giving something that I believe that can add some value. So the thing I wanted to talk about today are really just the three things that have changed the game for me when it comes to trading. And of course, there's many more than three, but these three are pretty powerful in particular. So let's go ahead and just kind of dive in. Um, Really, when I first started trading, there was, and a lot of people are going to go through times like this. There's times where I call. You might have heard of these sayings before, but you come into the space where you're either unconscious. Well, you first start at the space when you're unconsciously incompetent, which means you don't know what you don't know. It means you come into the space and you just have no idea what you're doing. But there's this next piece that happens, and it's called unconscious competence. And this is where it's like your beginner's luck. So unconscious meaning not knowing, competence means you're actually doing the right thing. And this is the most dangerous part because it's essentially where you make money and you have no idea why you've made money. And then finally, you start to get into the hardest part, but this is where the rubber meets the road, is where you become consciously competent, which means you actually know what is driving your success. So typically, the story goes like this. You jump into trading or investing, you have no idea what you're doing, you're probably losing a bunch, blowing accounts. But then you start to get this success from somewhere. You're like, wow, my trades are working, my investments are working. You might have caught a bull market like myself. And you just kind of think, okay, this is, I guess, how it goes. This is all I need to know to be successful. But then the dynamic starts to shift. Maybe it's the market environment shifting. Maybe your trades are just not working the way they used to work. Maybe it was just a small little segment that you saw this success in. And this is where you have to start to really wonder why things were working and now they're not working. And this is the hard part. This is where it's like, why was I successful before and now I'm not successful? This is a big piece where people usually gain a decent amount of money and then lose it all because they realize they didn't know a big piece. So that's kind of what I went through. I started out trading and just blew a ton of accounts, always was losing, like would pray that I would win one trade. It'd be like, please let me win a trade. And that's how I went into things. And if I won one trade and I lost like 20, I was like, this is awesome. I cannot wait to learn more. And then kind of out of the blue, I start just winning trades. Nothing really changed. I don't know why, but I'm winning trades. And in my case, it was the market was going into a bull market, and my investments were growing, my trades were growing, and I thought that's all I needed to know. I was like, all right, what I was doing, I was just YOLOing it into all of my trades. I was risking a ton on all these positions. But since I was in the right market conditions, they were all winning. So I'm like, all you got to do is basically bet a ton on a certain coin, and you just need to wait for that coin to explode. And of course, that was not a great strategy. That's not how you're going to win in the market over and over and over again. I just got lucky. So I didn't know that though. And I built some habits that were extremely difficult for me to overcome to actually learn a skill set that is consistently profitable and consistently sustainable. And this is where I had to, when the bear market happened, I was like, oh, well, all I need to do is to fix this problem is just huck a bunch more money into the market and just know it's going to go up. And, it went down and down and down and down to the point where you're like, wow, do I even know how to trade? And some of you guys might be feeling that right now. You might be thinking, what happened? I was so successful, but now nothing is working anymore. Really where you're probably at is you're now getting to the point where you actually have to learn why you trade how you trade, or how you're going to trade to be successful. So that I just wanted to highlight before I get into these three things. And it's really the big piece was transitioning from, where I didn't know why I was successful, to actually learning what I need to do to be successful. So the first thing that changed the game for me and took so long for me, and I still have challenges with it, but I believe I do pretty well now, but it is managing my risk. And you might be thinking, oh, that's so straightforward. Of course, don't manage, managing your risk is key, but really actually doing it and doing it over and over and over again, regardless of how juicy that trade looks, where you just know it's a no-brainer and you want to just risk a ton on that trade. So this took a lot for me. I just want to kind of walk you through this because the way I caught my first success in trading was simply putting the most money I could on random coins and assuming that they're just going to move up. And they did, luckily for me, at one point, but then they didn't. So I kind of left with this habit of, oh, I remember that trade. I remember this made me a ton of money before, so I can just go ahead invest a ton of money into that trade. Let me just give you an example just to not stay bored here. Let's just dive into the chart and give you an example of where I would have done just YOLO'd into the market. So here's a coin that I previously made a lot of gains on, and that's Jasmy. And I just recently got into Jasmy, and I just knew, because I'm familiar with Jasmy, I knew that this was probably going to be a big move. And I've learned over time more and more, what works and what doesn't. So, I'm a little bit better at this, but I was very close to just checking out this trade. I mean, it's up, let's see, so far. It moved up already 125% in, within the week, which is awesome. But it was very difficult for me to not just put a ton of risk on this trade. And you might be thinking, well, why didn't you? It worked. That's, kind of what I think in the back of my head, but that's my devil talking to me. It's because what if it didn't work? And if you're risking, I was risking 10% and often 100% of my account on a trade. And my stop loss was sometimes 20%, 50% even. Just imagine if you hit a stop loss, you risk 100% of your account and it's a 20% stop loss and you just lose 20% of your account on one trade. You only need 5 trades to basically go bust. If you're risking that, it's not going to do it, because you're risking a percentage, but the essence is you're going to be pretty close to bust if you keep doing that. And this was the hardest thing, and it might be the hardest thing for you too, is how do I stop that need to try to risk it for the biscuit? So I just go all in so I could be that next success story where I just went all in on XYZ coin and I made those millions. I tried doing that so many times, and sometimes I was successful, but statistically, the more times you try to hit that 1 in a million trade, you're just not going to make it. It's 1 in a million or 1 in 10,000, whatever it might be. How can you survive, say, the next 10,000 trades to get there? You're just not going to. So that's a huge piece here. So here's an example of a trade that I would have risked way more on because I just know this is a powerful pair. So how do I conceptualize that to finally stop risking too much? And really, it takes me down to who I actually want to become, rather than who I think I should be, or how I should compare myself to other people, or how I should fit in with probably the wrong crowd. And I had to ground myself into actually having the goal of being the best trader I can be. And that's much different than my prior goals. My prior goals was to make the most money possible, to be a crypto bro, to be a wildly profitable trader. Now, those are baked into being the best trader I can be, but the best traders in the world do not, absolutely do not over risk. So that was the game changer. It was an identity shift to where I shifted from being some form of, I didn't define it this way, of just degenerate gambler, crypto bro, to try to just whip some money into, say, the next meme token and try to make $1 million. And, it's great if people have done that and made money, sure. But it's just something that can't be done over and over again. It's a form of luck. It's a form of gambling. That's just the facts. So I had to ask myself, who do I really want to be here? Do I want to be somebody that just got lucky and gambled and made a ton of money? I thought about that for a little while, but I thought, is that actually going to be sustainable? Because by nature, if you are gambling, you have to walk away. And I don't want to walk away from this. I want to do this for the rest of my life. I love trading. I think there's no better skill set, no more available skill set than trading, because you have the market 24 hours a day with cryptocurrency. So I have opportunities all the time at a click of a button. I don't need to own inventory. There's always a buyer and seller. That skill is so valuable. Why would I choose a strategy where I have to walk away? So that's what grounded me into knowing that I have to do a sustainable approach. And the second thing was understanding the power of compounding and understanding that most people go broke in this game. So a lot of these people that you see left and right that are becoming millionaires, they're most likely, especially if they gambled, are not going to be a millionaire in the future. They might have a huge boom, but they're probably going to have a huge bust. And it took me a while to understand that the majority of the success you see out there is not going to sustain itself. And it's just by nature. And especially if you're doing things that go against the odds are going to catch up. I used to see it all the time in the fitness space. I used to see people who would get all these crazy results at the beginning, but they were doing things unsustainably. They were aggressively dieting. They were going into the gym and killing themselves. They might be using things that aren't sustainable. And in the end, the people that prevailed were the ones that are just consistent over a long period of time, regardless of what methods that they're using. So I asked myself, what do I need to do to be consistent over a long period of time? What do I need to do to survive the long period? Because I really just kind of believe, this is kind of that competitive nature, is I believe the edge to get ahead of everybody for the long term is to be that 1% that sticks to doing the right thing. You see it over and over and over again. The people that stick with their companies the longest, they just grind the hardest, most consistently, are those at the top. And that's how they keep it. So that was a huge piece for me in the risk management aspect. So I made that commitment to be the best trader I could be, not be a crypto bro, not try to make the most money. I know the money will be a result of proper risk management. So something I do as more of a practical thing is I have a reminder every single day that I have to go through that says, no matter what, you will not risk more than X. I'm not going to give you any numbers because everybody is individual, but X on any trade. And I can't tell you how many times this has saved me. I've literally put on a huge position because I'm like, I know this is going to be a giant move. And I read that, I cancel the order, and I go back to my proper risk. And that's been super helpful. And you might be like, well, if I don't risk a ton, I'm never going to make a lot. Really start to look into the power of compounding and really start to analyze how the crypto space moves. Like I said in an earlier video, the crypto space isn't a normal space. I mean, you can see just on this trade alone, this trade hasn't even really done its move and it's already up 120%. A little bit earlier this year, I took this trade. I actually got out completely today, but it's up 785% in 1, 2, 3, 4 weeks, less than 4 weeks. The crypto space is unique. You don't have to go crazy with risk to you can protect yourself and have huge potential gains. It is the best performing asset class. So that's why I like it. So hopefully that was helpful. That's something I hope I never invalidate. And I think that was a massive, massive, massive game changer for me, because it's great when you're risking a ton and your trades are winning, but when your trades are losing, that's the real issue. Okay, let's talk about the next one. Number 2 that changed my game is paying myself. This is kind of an interesting one. This is what comes down to greed or maybe lack of self-love. I have no idea. But actually taking profits. I just listened to a professional trader, and he said probably the defining moment between being an amateur and a professional trader is paying yourself. Actually having a functionality of your trading. And that's where trading can become functional, is if you are consistently paying yourself. So a lot of people, when they first start out, and there's nothing wrong with holding, but most people lose all of the gains that they've made every single market cycle because they just want more and more and more. And it takes like a level of getting rid of greed. Maybe it's a level of maturity. Maybe it's a level of self-love, whatever it might be. Paying yourself, or at least for me, was so huge. It allowed me to actually have money for things. And 2, it actually kept my account growing. I think that's the biggest piece is I was not aware of how many times my trades would fail. I would simply think I would just get into trades and it would be a home run every single time. I would get in and just let it go for the whole bull market. I was trying to do that, but then the market would take another leg down, and then that position is down another 50%. And that's brutal, right? So when I decided to start paying myself, for example, so we look at this ABT trade, you can see these took 50% marks. I like to mark those up and just show when I've paid myself during certain trades. See, maybe another one, ICP. Here's another one, took 50%. Metis, let's see here, sold 50%. That's really small, etc. And that really was helpful, because really you're never going to know for sure if the market's not going to have a huge crash down. It's not going to have another leg down. So if you're not paying yourself and just anticipating that the market is just going to go to the moon every single trade, most likely these trades are going to turn on you sometime, and you're going to lose all of those gains, especially long-term investors. Long-term investors typically, there's no problem. You might want to wait for another cycle, but see all those gains and get so sad after they've lost all of them, realize they didn't pay themselves anything. And I just kind of got real with myself. I said, what are the odds that I just get out at the top? Historically, very, very few people do that. It's almost impossible to do, to know that the market was the top. Okay. So to just assume that I'm going to just get out at the top, get out at a great position where I secure those gains, I just came to terms that that's not realistic, at least for me. So this is where I started to think about it. I'm like, well, my portfolio would be so much higher if I just held, but am I actually even going to keep any of those gains? So this is where trading has been helpful. I think, no, I'm not going to make as much money as I just gamble this stuff, away and just hope that there's a bull market. But if I understand how to pay myself, worst case scenario, I'm making money. And I think that's important. And over time, whatever your account is now, or whatever my account is now, is going to be at a point where paying myself modestly with these trades could be a lucrative amount. So that's number 2. The last thing here is protecting gains. So start out with, what was it? Managing risk. So finally not YOLOing it on every trade. Actually paying yourself to build your account and to not just assume you're going to get out all at the right time. And number 3 is protecting your gains. It means not going into a loss. So for example, let me get into the chart here. For example, so here we go. Here's a trade I got into today. Here's TRAC. You can see that it is moving above my entry, but what's to say that this doesn't come down and just stop me out? What's to say that it doesn't do that? Of course, I want it to go up, but what's to say it doesn't? a lot of times, at least when I first started out, I would just always assume if the trade moved in my direction, it would just continue to move in my direction. But so many times did the trade come back and stop me out when I could have, and this is kind of crazy, we don't think of this, or at least I didn't think of this, where I could have cut my losses at break even. Could have, say, put a trailing stop loss and cut my losses at break even and not let my trade go into a loss. And I can always get back in. That's the crazy piece. We assume that once we're out, we're no longer allowed to get in that. But what we can't do is if your trade goes into drawdown, you can't just get the money back. So let me show you just a quick example. Whether or not it was the right decision to do, that's up to you. But this is just something that I've learned that I really like. So for example, I got into Helium. Helium pushed up. I took 50% profit, so paying myself. And then it came back down towards my entry, and you can see this little trailing stop over here. I took myself out. Now it could bounce. It might just come back up again, but this is something that I found super helpful. And this is not saying you should do it. I'm just letting you know what works for me, is because now that I just don't lose money, or I try not to lose money, my account at least stays valid. And the number one thing that kills traders is they simply lose too much money. So I just thought to myself, well, if the number one reason traders fail is because they lose money, how do I just have a system to try and not lose money as much as possible? And one thing I try to do very, very often is try my best that if my trade has a gain, I do not let it come back and take a loss. So I'll be taking profit. I'll be trailing my stop loss. I don't like to let it go back into drawdown if I don't have to. Sometimes it makes sense to, but the majority of the time, if I have a trade that goes into profit, I don't want to let it go into a loss. And for me, it's been really helpful. Oddly enough, it's been very, very helpful because at least I'm not losing money. And I think that's a big, big piece that's helped. So I hope that helps for you. Those are 3 tips I wanted to come on here and give you guys. But again, this is not financial advice. This is just me sharing my experience. But those things really, really help me out. And like I said, I want to be the person that I wish I had. I wanted to be somebody, or I want to be somebody that shares things that can potentially be super useful on your journey. Because for me, there wasn't just like solid information about what people were doing in the markets. At least when I grew up, everybody withheld what they did in the markets. And it sucked for me. I was like, well, why can't you teach me how you do this? And I want to give back at least a little bit of how I do it. I'm not saying it's the right way, but maybe it is. So the main thing though with trading is I found that taking pieces from individuals, different strategies, understanding yourself and developing your own strategy using ideas can be so powerful. The truth is, I don't know anybody who has the exact same trading strategy. And I know a lot of traders. So that helped me know it's not about just finding the next person's strategy, because we're all so different. How often do you want to be looking at the charts? How quick do you want your trades to be? What assets are you interested in? What's your risk tolerance? What's your volatility tolerance? These are all super, super individual. So given that, I found that principles are the most critical piece. It's not strategy, it's principles. So my principles are manage my risk, take gains if there are decent gains to be taken, and protect your profits. And those 3 have been super, super helpful for me. So hope that's helpful for you. If you are liking these videos, definitely let me know and I'll keep posting them. So hope you guys enjoyed. I'll see you guys in the next video.